And I've done a lot of research on it. And I want to comment about one thing, and that's the premium in Shanghai. With the $10 premium above the Western price, people commented and said, well, what about the VAT tax that offsets it? It's not true. So the VAT tax that is added in China is the responsibility of the recipient of the metal after said recipient takes the metal off of the Shanghai exchange. So think about that for one moment. That $10 premium right now or thereabouts that they're paying over the Western prices, arbitrage that is sucking all the silver over, where a sophisticated trader sends $20 million at a $10 premium, makes $200 million and buys yachts in Tahiti. That VAT tax is in addition to a cost for the recipient. In addition to that $10, 13, 14% they're paying above and beyond when the metal leaves the Shanghai exchange. It is not the responsibility of me, the sender. It is me, the recipient, when I pull that metal off the exchange. So just a little point of clarity. I promised everyone I would make sure about that, and I am sure about that now. So that VAT tax, in essence, saying to China is saying, we want your silver so bad, not only will we pay you a premium to the Western price to siphon it and arbitrage it over, which isn't ending, right? Normally arbitrages end right away because the metal or the money or the investment goes to where the arbitrage is and it balances out. Here it's not. They're saying leave it on, and you'll be responsible for the VAT tax when you move it out of the exchange. That goes to show what the real price is and how badly they want it, and you know, just how screwy the Western paper price is. So just a little point of clarity.
All right, I'm so glad you clarified that. Of course, I now have a bunch of questions on that. Real quick, just want to clarify, you mentioned Keith Neumeyer. For folks who don't know who he is the CEO of First Majestic Silver. And just FYI, Andy, I was talking to Keith briefly at the Vancouver Resource Investment Conference, which I last saw you at. And it was a nice little moment for me because I went up and introduced myself to Keith, assuming he'd have no idea who I was. He said, oh, no, I watch your program. So I said, well, we'd love to have you on it at some point. He said, absolutely. If you'd like, Andy, it might be fun when we have Keith on to have you on, and you could kind of co-interview him with me.
I would love to. I've known him for a long time. I consider him a friend within the industry. And what makes Keith special, honestly, is in a industry that is dominated by geologists who spend their life looking at rocks. Keith is a businessman who has been serially successful. He's a cool guy, too. He's a down-to-earth, cool guy, and has my respect as a person, not just a hell of a businessman. But he sees things differently in the industry that is, you know, you get a bunch of scientists running it, and not a lot goes on, you know, outside the box. Keith is an outside-the-box guy, and I think I'd love to do that, and I think it would be a fun time.
All right. Well, coming from you, that's very high praise. That would be really fun to do together. All right. So when I get something scheduled with him, Andy, I'll let you know, and it'd be
right
really
on.
Fun.
Count me in. Thank you.
All right. So I appreciate you going and continuing to research that tax in China, because that was one of the things you and I were going back and forth on privately, trying to get our brains around. So let me ask you this. So that's in addition to the current premium that is being charged by the Shanghai Exchange for silver. What is driving that premium, and why is that arbitrage not closing? Right?
It's very simple. I mean, what would the logic say? The logic would say the powers that be, and this is coming from a country that's the second largest producer of silver in the world. People missed what they said in November. Everyone's focusing and fixating on the fact that they said we're going to limit exports because we're the largest exporter, or in essence, the largest refiner of doré. Doré are the bars that are crudely refined, that are pulled out of the ground by the miners, but China is responsible for refining the majority of all that doré bar across the globe, and then much of that would flow back into the Western markets. That's important, but what people missed is a couple months before that. Now, they said that, by the way, in response to the United States classifying silver critical. But in November, they said, you know, by the way, we're the second largest producer of silver in the world, and all the metal that we mine domestically will be held for domestic consumption. So you're talking
the export ban we heard about, right?
So, but that was in January. November, we're going to keep all the metal we mine. The export ban had more to do, in my mind, with the refining of doré bars, and because they take so much of it in, and we're going to slow down what we send back out. But in terms of why, I mean, think about it. What it basically says is we're choking on dollars. This is a byproduct of this huge trade surplus. And we realize that dollars have the lasting power of a melting ice cube. So let's take as many dollars as we can and find ways to find value for those dollars. And if it means paying a premium above the Western price, which we, the Chinese, believe is BS, then let's just pay more for it. It doesn't matter. That's the same mentality they've used for my entire career, Adam, when they have been mining gold that all analysts were saying was non-economical, that it was costing them $600 to pull gold out of the ground when it was priced at $400, $1,000 when it was priced at $700, $2,000 when it was, I mean, so they're digging deeper, going further. What do they care? This is the thing that is important to understand. If their plan is a long, see, where people really fall short in my mind and trying to analyze this stuff is the mentality that we have found ourselves in over the last several years. Now, you and I grew up at a different time, Adam, and a lot of people watching the show will understand what I'm going to say, but we grew up at a time where nothing came easy. There was no free lunches. You worked your ass off. You outworked people. You studied hard. You meritocracy, right? We've entered a period of time of gambling. Growing up, these kids in high school now or in the last 20 years have grown up under, Texas Hold'em, AI stocks, crypto, all of the things that have created instant gratification, right? So, but these people are thinking way long term, as far as I'm concerned, way long term. And that's really what's really important to understand with all of this is a long-term play for them, and they will continue at every turn they can to slowly drain the system and to use the Western price against us. And I think that's exactly what we're seeing right now is the Western price that I think price discovery is shifting eastward. It's leaving London. It's leaving New York. And as long as Western paper stays disconnected to Shanghai, physical silver will keep getting pulled out of the West and sent to where it is really valued. And the scary part is even Shanghai is getting tight with premiums moving out. And I think that's why forwards and futures are starting to feel undeliverable, where market makers can't source the metal easy enough. They can't hedge cleanly enough. And their exit becomes the move, where, in other words, the players here in the United States, it looks like they are exiting their positions. And that's where I think it snaps back into real price discovery fast, where the speculation is out and at least largely out, and it seems to be moving in that direction. We will see real price discovery, not yet, but these folks will play the long game until the people here are no longer stupid enough to send the metal at that premium, which won't go away because they're choking on our dollars. They're literally choking on them. So here's value. We don't care if it's more than the Western price. We've been using the Western price against them for years. Does that make sense?
Yeah, it does. So I'm gonna show this cartoon I've shown before. So you're essentially saying this, right? Which is,
yes,
Chinese are sitting on a ton of cash, and they are understandably, like most people, saying, look, the purchasing power of the U.S. dollar, we're pretty confident is going to continue to keep going down from here. So we care about hard assets. So yeah, let's exchange our paper fiat for atoms of things that we think have value, like gold and silver. So this is going on, and obviously the cash is piling up on the U.S. side, and the gold is piling up on the Chinese side. So right. What I hear you saying there, Andy, is, and sorry, I'm just trying to figure out how to get this thing off. There we go. Is the Chinese have been doing this for a good while, but it sounds like the game has moved into a phase where, to kind of continue to get the flows of physical bullion they want, they're having to pay more, right? They're saying, you know what, we're going to be the top buyer on the planet. We're going to buy silver at $10 an ounce or so more than where you can get it in most other places of the world.
Plus have to pay that VAT on the backside. So keep that in mind. Add another 13%.
Plus having to then pay the value-added tax on the other side. But they're basically willing to eat that $10 premium because they think it's a bargain. Because, hey, in 1 year, 5 years, 10 years, the cost of silver is going to be so much higher than it is right now in fiat dollars that paying 10 extra bucks for it right now is nothing. So let's
maybe even more than that, Adam, is they're saying, and pardon my French, that they believe the Western price is bullshit. Pardon my French. I just want to get that point across. They're saying the Western price is not right. We know it, they know it, but the public doesn't know it. So let's just quietly exploit that inequity. And arbitrages always end quickly. The world is so awash in instant information, and arbitrage exists at that level, at that kind of volume. It's over like that. The big JP Morgan traders, and boom, it's over. They'll just flood it until it's over. They'll send so much over there to take advantage of arbitrage, it ends. This hasn't ended, and it stays amazingly consistent for months on end. That is strategic. That is them saying, go ahead, be dumb enough to continue to send us this. And it fits hand in glove. Look at their policies for the last 20 years, building the Belt Road. What is Belt Road? The largest infrastructure project in human history, consisting of countries that are massively resource rich, but maybe underdeveloped. Look at the countries that joined the BRICS. These are all countries that are resource rich and have strategic shipping lanes. Look at everything they are doing. And it all revolves around either accumulation of natural resources, exploitation of Western price to do so. But it's not just in gold and silver. You go across the board on all the commodities. They already have a massive head start on not only production of rare earths, where 90% of the rare earths are accumulated or mined in the Eurasian continent, but they also refine 90%.
Right,
and that's why Trump came in. Trump came in and said, we're going to build this $7 billion smelter with the help of South Korean company. But these are the realities that, fortunately, someone in this administration understands. And that's why, and we'll talk about the deliveries. And I keep saying it. That's all you guys need to know, period. Nothing else matters. It's all noise. When we get to the deliveries, you'll understand that, in my opinion, it is all that matters. Now, this is a good piece of the puzzle, that the arbitrage, which never lasts this long, and it tells you that it's past the point of being economical for the Chinese. They don't care what it costs. We think the price that you are telling us is real isn't real. So we'll take everything you had and add $10 to it, and we'll pay the VAT tax to the government on the way out of the exchange. That's the real price of silver today. We'll see what tomorrow looks like.
Okay, and I do want to talk about deliveries and physical flows and stuff. Yeah. Real quick though, so the exchange is paying this premium, right? Who owns the exchange? Is it owned by the government?
In Shanghai, yeah, I would assume it is owned by the state. Now, that's a question I don't know. I would assume, because I don't know if it's an exchange like the COMEX, which I think it is. It's state controlled, would be my guess. That's COMEX, where it is an exchange, whereas the LBMA is there is no exchange. It's an over-the-counter. It's kind of like eBay. It's mano a mano. Yeah. In Shanghai, it's got to be state-owned. It has to be. So okay. I would venture to say 99%. But I can validate that. Yeah. I've always made the assumption it was state-owned.
Yeah, I mean, the reason why I ask is, if it is state-owned, then it makes sense the state is just paying that premium for all the reasons that you're saying.
Well, I don't know, even if the state owns it, if the traders on the exchange are not all state-owned. I mean, it's not all just the government running the exchange. There are traders on there that are subservient to state regulations, but they're independent actors as well. So that I'm pretty sure of as well.